Gold is continuing to push higher. It's, as I speak on the screen, $4,049, up $65 on the day. Now, yesterday I saw a very funny thing. Gold was trading at $3,977, and there was a very major, well-known investment bank, one of the biggest in the world. I won't say its name because I don't want to be embarrassing banks by ridiculing them, but I am in a way. This particular bank said gold could reach $4,000, and that was a day when gold was up $50 and almost touching $4,000. And I think, okay, so when it touches $4,000 later today, you're going to say, oh, we were right all along. Well, what about your clients? Did you tell your clients it touched $4,000 6 months ago, a year ago? I'm glad for those of you who've been listening to this channel and taken some action in that respect. Sébastien Lecornu, he was appointed Prime Minister on the 9th of September, but of course he didn't really take office officially until he's formed his government, which was on the 5th or 6th of October. And 2 hours later, he resigned after forming the government. So he got his cabinet together. That's the group of people, his inside group, who are going to decide on policies. But there was so much bickering and so much infighting between the various parties involved. He had to resign because not only his opposition, but even his allies were threatening to bring down the government. So now President Macron will have to appoint another Prime Minister. It'll be about the 1, 2, 3, 4, 5, 6, 7th Prime Minister he's appointed in a couple of years. Can he find another Prime Minister to do the job? It's not a job you want to have, really, and you're never going to get any agreement about this budget. So I don't know what's going to happen with the next one, if and when he's appointed. I suppose it'll be in the next day or so. And maybe Macron himself is going to just give up, throw his hands up in the air and say, I can't do this, chaps. And he might resign. Now, I don't think that's likely, but you can't exclude it. So France is really in political turmoil. And of course, we've got the USA in political turmoil as well. So what's gone in the USA is every year before the 30th of September, which is the financial year end in the USA, they have to agree in the Senate the budget for all the government agencies. They have to authorize payment for them. And if they don't authorize them, if it can't be agreed, then the agencies, like the Bureau of Labor Statistics, for example, don't get any money. And if they don't get any money, they can't pay the staff, so they have to furlough the staff.
Across the Atlantic, America faces turmoil of its own. Each fiscal year, Congress must approve funding for federal agencies before September 30th. This year, deep partisan divisions led to a stalemate, triggering another government shutdown. Nearly 800,000 federal workers are furloughed without pay, halting key data releases from the Bureau of Labor Statistics and other institutions. While previous shutdowns saw workers eventually compensated, this time uncertainty looms. The paralysis exposes a deeper fragility in U.S. governance, as lawmakers clash over spending, immigration, and health care, all while financial markets grow increasingly uneasy about the ripple effects on economic stability.
Now, it is said that historically, and possibly this time around as well, probably this time around, the staff will get paid if and when the money is allocated to these departments. But in the meantime, it means people are not working, they're furloughed, and I know some of you will say, it's kind of like a free holiday because they would have been paid at the end of September, and the next pay date presumably is the end of October. I assume they're not paid weekly. So probably this will all be resolved before the end of October, maybe in the coming days, and they will get paid as normal, but they'll have had a few days holiday. They're probably in their 8th day of holiday today. That's what some of you will say. But there's no guarantee that they're going to be paid because that hasn't been agreed. In the past, it always was that they would get their pay for the days they weren't working, but it's not yet agreed. I think President Trump has said they will get paid, but he's not making the law like that, so we'll wait and see. But the real problem here with the US shutdown is that it's complicating the Federal Reserve's decision-making process because it's limiting access to the government data, to the economic data. So the policymakers at the Fed are increasingly relying on independently produced data and survey information from independent organizations to assess the economic conditions. And now we mustn't forget the next FOMC, Federal Reserve Open Market Committee meeting, is October 28th and 29th. That's 20 days away from today, and probably everything will be resolved by then, and we'll start to get the data again. But what if we don't? Well, there will be, if they're making a decision on interest rates, they will be flying blind.
The U.S. government shutdown isn't just political theater, it's complicating the Federal Reserve's decisions. Without official data, the Fed is forced to rely on private surveys and independent analysis ahead of its crucial October 28 to 29th FOMC meeting. This lack of reliable information means policymakers risk flying blind when deciding whether to hold or adjust interest rates. Financial markets are responding nervously, with volatility rising and investors turning towards safe haven assets. The absence of federal data also delays inflation, employment, and spending updates, leaving traders guessing and further amplifying uncertainty across global economic forecasts.
So let's just have a look at what's happening to the currencies while we're flying blind. Funnily enough, the US dollar isn't getting weaker. It's kind of strengthening against major currencies, but particularly the Japanese yen. Now, the Japanese yen fell a lot. I mean, it fell, when I say a lot, it fell by about 1%. Now, that in foreign exchange terms, that is a lot. So it fell by about 1.05% to 151.95 yen per dollar. It means to buy a dollar, it costs more yen than ever before. Let's just have a look at that chart and see how it's going, and if it's getting any worse than the 151 I showed, I spoke about. So here we are, here's the yen, and it's now 152.97. Here you see on the chart, the last day or so, the yen weakening rapidly. Why is the yen weakening so much against the dollar? Well, the appointment of a new prime minister in Japan, her name is Sane Takaichi. I'm not sure if I pronounced that correctly. She's the new party leader, and she advocates for monetary accommodation, monetary expansion, fiscal stimulus, and that reduces the expectations that the Bank of Japan will continue tightening. Tightening obviously reins in inflationary expectations because they raise interest rates. Loosening is the opposite of that. It means that interest rates come down, and when interest rates come down, inflationary expectations go up. So what's happening in Japan? The inflationary expectations are rising, and that causes the Japanese yen to weaken against the dollar. I think we should go and have a look at what's going on in gold. So gold is continuing to push higher. It's, as I speak on the screen, $4,049, up $65 on the day. Now, yesterday I saw a very funny thing. Gold was trading at $3,977, and there was a very major, well-known investment bank, one of the biggest in the world. I won't say its name because I don't want to be embarrassing banks by ridiculing them, but I am in a way. This particular bank said gold could reach $4,000. And that was a day when gold was up $50 and almost touching $4,000. And I think, okay, so when it touches $4,000 later today, you're going to say, oh, we were right all along. Well, what about your clients? Did you tell your clients it touched $4,000 6 months ago, a year ago? I'm glad for those of you who've been listening to this channel and taken some action in that respect.
Meanwhile, Japan's currency is under pressure. The yen has fallen sharply past 152 per US dollar, its weakest level in decades. The decline followed the appointment of Prime Minister Sane Takai, whose pro-stimulus agenda signals a return to looser monetary policy. Her approach contrasts with the Bank of Japan's recent tightening stance, fueling fears of higher inflation. As investors expect lower Japanese interest rates, the yen's value drops while the dollar gains strength. This shift highlights Japan's continued struggle between economic growth and inflation control, a dilemma that mirrors broader challenges facing global central banks.
But unfortunately, many banks like to make predictions which are not too far off the spot price because they want to stay within the bunch and they don't want to be too far wrong. And I understand that. You want to keep your job, and predicting something which is more likely than not to happen is probably a good thing. So you can go to your bosses at the end of the year and say, I made 45 predictions this year and 42 of them were right. Like, for example, one of my predictions was gold will hit 4,000. The fact you only made it an hour or two before it got there is neither here nor there. It's all to do with the statistics of how many things you got right. But I find that a little bit funny that as gold is touching the $4,000 level almost, somebody comes out and makes that little predictable prediction, shall we say. But what's happening with gold, obviously, with the uncertainty regarding the USA, the uncertainty regarding the dollar, although which I stress the dollar's not going down, but there's this fear that it might take a sudden lurch for whatever reason because we don't know what's going to come out tomorrow. There might be some unexpected good or bad news or something to do with tariffs. We don't know. Or maybe there's some investigation of an important figure, or maybe a big company gets targeted in some way, and suddenly everyone says, "Oh my God, they're targeting such and such company," and there's a bit of a panic. We don't know, so people are a little bit nervous, more nervous than usual, and I think that's why they're looking for adding some safe haven to their portfolio. Now, gold is a very small market, or relatively small market compared with other things. So a little bit of money going into gold, and I'm talking the free float of gold as opposed to all the gold in the central banks. A little bit of money going into gold is boosting the price. So I think that's kind of what's going on with gold at the moment. We've also seen, I think the figure was, if I saw it correctly, I'm just checking if I can find it now. I think we saw that there was $12 billion, and that's not a lot of money, by the way, going into the exchange-traded funds.
Amid geopolitical and financial unease, gold has broken past $4,000 per ounce, marking a major psychological milestone. Analysts at major banks are now scrambling to adjust forecasts, some only predicting $4,000 as it was being reached. Safe haven demand is surging as investors seek protection from volatile currencies and political risk. Simultaneously, Bitcoin and Ethereum are hitting record highs, $125,000 and $4,400 respectively, driven by strong inflows into cryptocurrency ETFs in the US and Europe. Together, gold and digital assets are emerging as dual safe havens, reflecting a deepening global distrust of traditional markets and fiat currencies.
Yeah, I don't have that figure not quickly to hand. So what else is going on? Bitcoin. Bitcoin has hit another all-time high of, I think it briefly touched as much as $125,000, but you can see it at $122,000 at the moment on the chart there, more than double the price of a year ago, and some people are reckoning they should go into it. Let's have a look at Ethereum, which is currently trading at $4,485. It's up from $2,400, so up to a year ago. So 2,400. This is the year ago figure here. Roughly $2,400. Now it's $4,400. So up $2,000. Not quite double, but kind of heading upwards. Yes, one of the reasons I see there is that there was net inflow into the exchange traded funds which back Bitcoin. They say that 5 billion flowed into the US ones, 563 million to the Swiss ones, 312 million, for example, into the German ones. I don't even know what those are, but there's net inflows into the exchange traded funds which are backing Bitcoin and Ethereum. So the European Central Bank is, inflation in Europe is showing 2.1% in 2025, and the ECB is predicting 1.7% in 2026. And they're predicting 1.9% in 2027. So according to the European Central Bank, they will be on target with their inflation numbers.
Both sides of the Atlantic now stand at critical junctures. France faces the threat of political paralysis, while the U.S. grapples with a shutdown that could extend economic weakness. The European Central Bank projects inflation cooling to 1.7% by 2026, hinting at potential rate cuts ahead, but such forecasts rely on fragile optimism. Investors remain wary, central banks continue to hoard gold, and consumer sentiment data from Michigan University will soon test market confidence. Whether the U.S. resolves its shutdown within weeks or drags on longer, the global economy is clearly shifting, and uncertainty is the new normal.
And therefore, what they're saying is, based on their predictions of low inflation rates, they're indicating that further interest rate cuts are possible, assuming that the inflation risks remain where they are. So their meeting, that's the European Central Bank, will be on the 30th of October. So in the USA, we've got these 750,000, maybe 800,000 people, employees of the government who are furloughed, and probably, as they don't know what's going to happen with their end-of-month salaries yet, they're reducing their spending. That's obviously in a slowing economy where we're seeing the number of unemployed people go up and the number of people or number of new jobs going down, although we're not getting the figures anymore, so we're not actually sure what's going to happen. The government still continues to fight over the shutdown. They're disputing over things like healthcare, immigration, and of course the executive powers of the president. So these things are all being negotiated. I guess they'll reach an agreement in the coming days, and when that agreement is reached, my question is, what will happen to the price of gold? Will it come off somewhat? It wouldn't surprise me. Or is gold being driven by the non-stop central bank buying? I mean, it's not like it's going away. Every month after month, we see central bank buying more and more of it. Not more and more of it, but it's running at a fairly constant rate. Central banks are indifferent to what price they pay. What's coming up? Well, we've got the consumer sentiment index coming out of Michigan University on Friday, and various Federal Reserve officials speaking. Federal Reserve meeting October the 28th. That will go ahead. It's not subject to the government's shutdown. They're not part of the government anyway. So how long will the shutdown last? Well, historically, they've reached resolution within 2 to 3 weeks. We're 1 week into it now, but it's kind of unpredictable.